here from quantlabs.net. Okay, so as I've made my uh, algo or my strategy for pair trading slash arbitrage is now available for all my Quant Elite members. We're now moving into the second phase, focusing on futures and options, market trading, mostly the algorithms around that for now. So it's going to be all mechanical. And I just wanted to show you where these algos come from. Basically, it comes from this book that you're looking at from Colin Carter, who's a professor over at UC Davis. And these set of algorithms are really more fundamental based, uh, focusing more on the equilibrium in the markets, specifically futures and commodities, and really focusing, as I said, on fundamentals, meaning supply and demand, and the kind of assets that these type of algorithms will work on are not equity, but they'll work on commodities, energy, agriculture, precious metals. Can also work on T-bills or treasury and euro dollar. So these are really good for that. And the reason I'm doing this is because when I'm watching typical Bloomberg, CNBC, or whatever, you'll always hear about early in the trading day, let's say for Asia, for US, for Europe, they'll say so and so futures are pointing up, meaning the open interest, which can usually give you market direction for the day. So even if you're not going to be trading options and futures, this data is really important to give you a better idea on market direction. And I know from my experience from reading a lot on new services is that everything's pretty well intertwined, and the phase three will also be focusing on FX or Forex with global macroeconomic events, announcements, sentiment drives the Forex market globally, and the volatility, which feeds back into the futures, feeds back into the stock market as well globally on all the major regions in the world. And because of this is why I'm going to be focusing on these algorithms, because they will give you a very general overview of where markets are at in the various futures. Now, in terms of asset classes, I don't know if I really want to be trading futures, but I do have a real interest in options. Now, options outside of Forex and options, options very, very, very lucrative. Now, if you get a good set of strategies, algorithms, and a system that can watch the options, you can make an absolute killing in magnitude of 5 times, times 10 on a very small trade where you're just paying out your premium as your total risk. And that's pretty wild. I've talked to some highly experienced option traders, and then there's a different two sides that this course will cover: the hedgers versus the speculators. Now, the speculators are probably 80% of the market in the options market, and a lot of them will lose, no different than retail trading. But the real profit to be made is in the hedging side, the people that are supplying the actual commodities for physical delivery. So I'm not saying I'm going to go there, but at the end of the day, if I had big, big, big load of cash, that's one market I would definitely consider if I was to really look for maximum optimal opportunity. So just as a history of why I'm interested in options. Now, the course itself is a UC Davis course from UC Davis, the university. This is put on by the professor Colin Carter. This is his book. This is the textbook for the course. These are old set of videos, but from the fundamentals of these YouTube videos, they're very useful. You can build out algorithms from them, and that's what we're going to focus on. But specifically, I'll be taking a lot of the algos right out of the book. These will be right up to date. I think it's about a year old because, as you can see here, there's a July 2015 edition. So that's pretty well the history of the course. It's really one of the best courses I've done online for anything related around trading. Now, let's talk about the futures market and the size of or the volumes in terms of futures. Obviously, number one will be E-mini on the S&P 500. That is the standard benchmark globally for how stock market indexes do. As you move down this list, depending upon the market conditions of, let's say, the economy, specifically in the US, you'll notice that just judging by the volume and the order, the market is changing and it radically changes. And you can see the heavy interest in where people are putting their money and their trading activity. You can see here there's a lot of uncertainty in the markets over the latest market, we'll call them crashes, but corrections out of China, and there's literally no clarity in Europe, and with the growing debt in the U.S., there's a lot of uncertainty overall in the markets. So as a result, people are moving to the safe havens like Treasury notes, 5-year, 2-year. Oil, I haven't seen this high before, but over the last few weeks, oil is coming back on the pricing. So obviously the activity will, or the volume will grow as prices go up. Eurodollar is usually a fairly large asset. This is more at an institutional level. And then of course we've got, as I said, for the oil, NASDAQ, all the stock indexes are, traded. But here's another one that you don't see a whole lot of is gold. Again, uncertainty. It's a precious metal, so that's traded quite a bit. Euro FX, well, that's a standard pretty well. Japanese yen's used as a safe haven for now, up until a certain point. Japan, the markets in Japan, the topics, as well as the Japanese yen was used as a safe haven. Natural gas and corn come up. So when it comes to the commodity type of agriculture, they don't really get a lot of volume because they just don't have the same returns you get with kind of right now oil, T-bills, and precious metal. And as the economy gets worse, you'll see the precious metals grow their volume as well. Just right now, the markets have been doing fairly well on the S&P and the Russell and the Nasdaq and so forth. So this is a very good indicator or list to watch the futures. And again, this will show you roughly an interest from where the large future asset classes or asset securities are being traded on their volume. Now, the open interest is something that you may like to watch. You can see how the money flows globally. I'm not sure how often this is updated. I guess it's daily. But you can see where the growth is based upon the market conditions for the day. And if the markets are up, obviously the safe havens will go down, as well as the more other areas will grow. So it's kind of fascinating stuff to watch. So where do we leave the course? So if you come under my Indie Python Algo trading course here, what you'll see is the regular infrastructure building blocks. This is now available. Arbitrage pair trading with equities, and now I've just added this course, and each unit will be added as I get to it, and I'll make them available pretty well almost on a daily basis. So this course will be added, I'm hoping, multiple times a week based upon the algorithms I get to week by week with the video, source code, and all that. So I just wanted to give you an update where the next phase is going. I still need to schedule this phase here, phase 1 arbitrage pair trading with equities, and that's pretty well it. Just wanted to let you know. Highly recommend you get the book here, go through the course to get a better understanding of just basically how the markets flow, the fundamentals of the supply and demand, and the equilibrium of the markets. Really important stuff, I think. Anyways, I'm hoping that helps you out. Have a good day.